The other pocket which has appreciated very smartly is the entire financial space, starting from State Bank of India all the way down to Dena Bank, all the way up to Central Bank. Are banks not fairly priced? Because there were a lot of NPA concerns. Thankfully, the script has not played out as what markets were expecting.
Banks are kind of meant to take business risks in their balance sheet, and that's how they charge 3%, 4% spread between borrowing and lending. So the risk is visible only in the stressful times like this. So the good banks, very good banker would avoid the risk, would take the risk in such a way that it never materializes. So that's the kind of the best banker not to have any stress of credit cost even in at this point of time. But with the best bank, I would say. So HDFC Bank has not changed its profile of.
Do you like HDFC Bank?
Yeah, it's a fantastic bank, and I think that is, it's like an FMCG stock, like it's evergreen kind of bank, which is growing at let's say 2 times the industry. If industry is growing at 15%, they are growing at about 30-32% without any problem, and still they are fairly small in a way. They are 3-4% of the entire banking system, though they are the best. So I think they'll keep growing for quite some time at a much higher than the industry rate. 20-25% should not be a problem for them. So that's one type of bank which is very conservative in assumption of liability, and they'll be very choosy about corporate liability and other things. But whole lot of wholesale banking, corporate banking, which is being done by PSU banks or even larger private sector bank like ICICI and Axis Bank. So those banks are showing that at this point of time they have a little more NPAs and gross NPAs, and they have restructured assets. But this restructured asset is part of banking business, because you just cannot allow the banks businesses to go down and don't come to their help even during the time of stress.
So there could be still more stress in PSU banks.
My sense is you have seen the worst of the stress, maybe another quarter of stress, and then I think things will start. Provisioning has already happened thanks to the very stringent RBI policy. And my sense is from March quarter onwards, you will start seeing actually recovery of the loan book.
Central Bank, SBI, are they both hold or are they both buy also at these levels?
I would think if you don't have enough in your books, these are time to buy.
After Cane India, are there any large cap stocks you've added in your personal portfolio?
No, actually I have not done anything in last 1 month. I'm just watching the firework in the marketplace, and I'm just thinking, what should one, once it settles down, somewhere it will stagnate, or if I get any idea, any insight into any company, then we'll start buying. Levels don't matter. 53, 54 is not uncomfortable level to buy if you like a stock.
What's on your radar? What essentially are the themes you are chasing?
I'm looking for businesses which have pricing power and which I understand. Basically, first thing is I must understand, and second is that it should have a good pricing power. So I'm looking for businesses which I understand and which has long-term pricing power, and which is not, given the growth levels, which is not kind of crazily priced. You have Asian Paints, you have Bata India, you have Marico, even Lever. So they are terrific companies, but they have pricing power, but the valuations are at about 30-35 times for given 15 to 17% kind of growth. So I'm yet to get kind of aligned to any one of them to be confidently saying that okay, let's allocate 5-10% of the portfolio into them.
For next 1 year, would you bet on commodity consumers or commodity producers? Because the opinion on commodities is split right in the middle. There is one opinion which is world will slow down, commodity demand will slip. The other thought is central bankers, they will print more money. There are 40 major elections which are due this year, and as a result of prime pumping by central banks, commodity prices could just go haywire.
So one of the commodities we have put bet on is CAN. That's oil producing company at global prices. So see, wherever you are clear about your understanding of the commodity and the company which is operating it, both are important. Having a big picture, I may be bullish on steel. I like Tata Steel, but I like Tata Steel Jamshedpur. I don't like Tata Steel Chorus. But when you go to buy, you get Jodi mein. So
you cannot cut and choose.
Yeah, so you cannot cut and choose. So you should not only like the commodity, you understand the commodity, and then you must like the underlying company which you want to buy. We have limited choice about which commodity and played by which particular company. Typically, like Hindalco is aluminum company, but they also have Novelis. So,
do you own a commodity stock apart from Kin?
I used to own Tisco, which I have now shed. I don't have Tisco anymore, but I don't own any pure commodity company at this juncture.
Last time when I interacted with you again on the same forum, you were of the view that I want to restrict the number of stocks I own in my personal portfolio.
Yeah.
So if you're 30, you wanted to bring that number down to 20.
Yeah.
So what's on a sell list?
A whole lot. I keep whatever I decide to sell, then I just clean it up right till then it's on a fire list and it will not.
So what is on your fire list?
No, right now I'm not selling anything.
So the stocks which you own, you're reasonably confident that you want to hold them for another 2-3 years.
Yeah, I mean, see, holding period is literally unlimited. There's no defined period that 2 years, 3 years, 4 years. When I think that stock has reached to some kind of crazy level, or somebody comes and says that, oh, Raamdeo, you have this 500,000 pieces and price is 400, I want to give 500 rupees. Then I think and kind of okay. Somebody is asking.
At 500, will you sell Kin?
Yeah, why not? Today you offer me 450 as well. So I mean, somebody gives premium and things are matured and kind of thing. Then you start looking to sell this kind of. But I mean, there's no set agenda that I want to sell this at this price at this point of time and kind of thing.
A lot of our viewers who follow you, a lot of our viewers, they track your advice, who buy and sell stocks on their advice. So let's just, go back and revisit some of your old calls. Now that markets have appreciated by about 20%, specific stocks which you've recommended, they've appreciated by even 40-50% in the last 1 month. Is there any stock to your mind which you own, which you like is looking overpriced? And it's a question which I'm asking for the benefit of our retail viewers.
No, nothing particularly. I mean, you discussed about Bharti and so I don't see. I mean, I'm not doing anything. So clearly, whatever I have, say central bank, we are stuck with high price purchase. I think at 80, 85, 90, whatever is the price, I think you have to. I mean, if you have more appetite, you can average it because I think from here things may look up and this is a year when you can buy bad stocks at low prices and make some money.
So my final question. In December, when we interacted with you, you were a buyer. After a 20% run-up, are you a seller or are you in a wait-and-watch mode?
If you ask me what I'm doing, I'm waiting and watching, clearly. So let's be honest. But I'm very active. I mean, I was even at 4,500, I was actively looking for ideas, and I was buying some of them. Today, those stocks are appreciated, as you said, by 20-30%. So I'm on the kind of hold. But any insight today, say McLaren. The stock is at the same level. It has not rallied by 20%. But any insight into what is going to be the price, because I'm waiting for the price of tea to, upsurge in next 1 year or 2 years. So whenever I get the tightness coming into the tea market, or if I get an insight from somewhere by reading some newspaper, that yes, this is going to happen, I'll go and buy. I'll increase my position.
Mr. Agrawal, we're delighted to have you on ETNA. Thank you for joining us.
Thank you.
That's it on the show. I'm Nikunj Dalmia signing off.